Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today, and the first one I'd like to look at is the euro against the dollar. Here we can see an indecisive spinning top yesterday, though not a great one to be sure. You could also see it as a possible bullish harami, but it looks a weak one if it is. It was nevertheless a new low for the market, one not seen since November last year. However, the most important feature of yesterday was the market finally reaching target X1 in the 117.05 area. That's the initial target for the bear flag formed over late February till today. We still have target X2 in the 116.15 area as the final target for this particular move down lower. I've mentioned in earlier videos that we have below the old neckline from the August-September 2020 continuation head and shoulders pattern. That's currently at 117.18. Now, I suspected the neckline was not that good a support. Well, it seems to have been good enough this week to halt the move lower so far. This is one to watch. Now, further down we have the lesser Fibonacci line at 116.94 and the lower time of the 2021 bearish Andrews pitchfork currently at 116.09. Then there's the significant, longer term, continuation lower diamond trend line. That's from the December 2019 to May 2020 super diamond pattern, currently at 116.16. It's worth paying close attention to this lower trend line, as the upper trend line halted the rise back in all of the following July, August, September, and December last year, and January this year. Meanwhile, topside also, we have the important 50% Fibonacci line of the June 2020 to January 2021 move at 117.58, and then the significant June 2018 high at 118.51. The middle time of the 2021 bearish Andrews pitchfork, currently at 118.17, in between. So far today, a test down below the old neckline, but then a pull back up, still under the 50% Fibonacci line at 117.58. The next chart to look at is cable, aka sterling against the US dollar. A bullish engulfing pattern yesterday, but it was immediately after an indecisive spinning top. I suppose it wasn't the hardest things to achieve. Overhead, we still have the short medium moving average currently at 138.27 and the close line, that is the broken November 2020 to March 2021 uptrend currently at 138.66. Below we have the familiar congestion zone 136.5 to 137.5 from January and February, which now has the rising medium moving average currently at 136.56 within it. Further down we have the supremely important lower time currently at 136.03 of the June to September 2020 bullish shift pitchfork. This lower time along with the middle time above, which is currently at 140.49, have given the bullish angle of attack of this market since September last year. Finally, I have drawn a new uptrend from November last year, currently at 137.06. I will see how this develops. So far today, not much. A dip, then a recovery to a little higher, but that is all. Not really a follow-on to yesterday's bullish engulfing pattern, I'd say. The next chart to look at is euro against sterling. All still quite tense here and interesting as well. A new low and low close yesterday. That's not been seen since February last year. However, the new low was only by a little. It was nevertheless the second consecutive clear close below the recent descending triangle pattern. Meanwhile, we still have two of the three original targets below. Target X1 in the 84.75 area, the target for the recent sideways triangle, and target X3 in the 84.5 area for the descending triangle pattern itself. I've left target X4 above on my daily chart, the target for a possible break upwards of the descending triangle. This is in the 87.15 area. Well, the reason why, if there's one thing I've learned about patterns, is never underestimate the chances for another false break. So far today, halt at yesterday's low once more, and a little move higher. But we're back where we started right now, looking like an indecisive doji cross of all things. The last chart I looked at is the US dollar against the Indian rupee. A bearish harami yesterday, a response to the previous session's bullish opening white Mariposa. That achieved the preliminary topside target X2 for the recent falling wedge pattern in the 72.60 area. Yesterday's action also was hung from the same 72.60 area and could be seen as a possible pipe top, though we'll have to wait a few days to make sure of that. The other interesting feature of yesterday's action was the close back down below the medium moving average, currently 73.20. This goes a little to support the tweezer top idea and maybe even something that will become evident soon, or not. I should also point out this time that despite two breaches of the upper time, currently at 73.49, the October 2020 to February 2021 bearish Andrews pitchfork, and the interesting 50% Fibonacci line of the July 2019 April 2020 move at 72.64, we still haven't had a close over it. So far today, a seeming immediate countering bullish harami right now. The market is back up over the medium moving average, but seemingly halting ahead of the upper time. That about wraps it up. So in the meantime, happy Easter, good trading, and stay safe.